Good morning, everybody. Welcome to another day Market Report brought to you by Mike Bjork. Today is Monday, September 12th. Hope you guys had a great weekend. We're able to enjoy some good football games. Kind of a light day today. We don't have any economic news releases scheduled for today. But the big ones will actually start really Thursday. We got like a couple of data tomorrow, but not as important ones. The big ones will be coming out on Thursday and then a little bit on Friday as well. So this week will be a little light in the early part of the week, but a lot of it is going to be taken is cue from the regular market. So we'll kind of jump in here. We'll kind of cover what we're talking about here. Right now, the stock market was up. It did start off lower today. As we're getting a little bit of comments by the Fed members, we're getting a lot of hawkish comments. You know, the Fed funds futures, which basically is the forecast of the percent of a chance of the Fed raising rates, has gone up. It's up to about 27% now. So because there's been a lot of hawkish comments, we had a few speaking today as well, and again more hawkish comments. Kashkari is the only one that didn't really have a hawkish comment, basically saying that there's really no need to hurry to raise rates as the data doesn't really stimulate or even show enough really to go ahead and be in any hurry to raise rates. But the other two like Lockhart and Rosengren have basically saying that everything's moving along fine and we should start considering raising rates. The big one will be later today, about 10 o'clock, 10:15 this morning in Pacific Standard Time. Will be Lyle Brainerd will be speaking. Now, she's a very dovish Fed governor, so if they start hearing any hawkish tones from her, that could be really bad for the bond or for the equity market, which could be bode well for the bond market. Because that will definitely raise the Fed funds futures and look at a possible rate hike next week. Now, today will be the last day you're going to hear any of the Fed governors speaking because they go into their blackout mode. It's a week before which is basically the week before their meetings, which will be start next Tuesday and give their announcement on Wednesday. So a lot of volatility out there, a lot of assumptions might go in there, and people will be moving back and forth, positioning themselves for a possible rate hike next week. So be very cautious due to all the volatility. So also there's something else that roiled the market, kind of spoiled the markets a little bit today. I guess Clinton Sunday actually had to leave a event abruptly a little bit because I guess she was diagnosed as with pneumonia, I guess is what they're saying. Again, that's what they're saying, being reported out there, and I guess that it might give an advantage to the Republicans. So the elections are kind of creating a little bit of animosity for the equity markets as well. Meanwhile, oil's kind of dropped down a little bit further. It's down to about $45 a barrel due to the stronger dollar. And then later today, we also got the Fed selling off bonds, so there's a big sell-off right now, which is kind of diluting the values and everything in the bond market, which is, as you'll see here, it's been dropping here. So we had a pretty big drop, even a price for the worst last week on Friday. This is Friday. We did touch off this resistance, this floor here, but today we're kind of breaking below it a little bit. So this is going to be room for caution right now at about 9 basis points lower than when we left off on Friday. Which kind of leads, not so much it's not 12 basis points, but some lenders may be pricing for the worst. Our next resistance level will be this 100-day moving average. As you can see, it's about 1025-ish, roughly. What would be 103.19. So you can see this next big drop. Here we have room where we can potentially drop. So hopefully we can stay above this level here. And then try and build our way back. So we got to be a little cautious here, or we could drop a little bit further. So pricing has got worsened a little bit in terms of interest rates over the last couple of days. As you see, we had this, see how it's kind of worsened up a little bit here. All right, so be a little cautious here, and hopefully we'll see some improvement over the near term. I think long term we will see some improvement, especially even if they do raise rates. That could be good for our long term interest rates, as that's a sign against fighting inflation, and money will come out of the stock market, will come into the bond market. So the reason why they're jittery is because Europe didn't do much in terms of stimulation, and then Fed's talking about raising rates. So basically they're seeing that the end of the line of the free money or cheap dollars. So doesn't usually bode well for the stock market. So money usually comes up. It'll come into the bond market and will help out interest rates in the long term. All right, folks. I hope you guys have a great rest of your day. We'll see you guys tomorrow. Thanks so much for watching. Take care.